Hello, my dear students. First of all, welcome to class 12, and we are going to begin with the first chapter of accounting, finance accounting, partnership. So what we'll do is, as you have already must have gone through the YouTube video link sent to you. There you've seen the introduction to partnership accounts. You could refer to that, alongside with my lecture that I am sharing with you right now. In your textbooks, you will be able to see that the first page itself contains the introduction to partnership accounts. Now, as just a small recapitulation of what I have already told you when we began with managerial accounting for the other section. You have already done sole proprietorship accounts in class 11. So we've done journal, ledger, cash book, trial balance, then final account, single entry, NTO, all that, but keeping in mind your sole proprietorship form of business. Now, which are the most popular forms of business in India? We've got sole proprietorship, we've got partnership, we've got joint stock company, and then cooperative and Hindu undivided family, and so on and so forth. They come later on. But the most, important ones, the predominant ones are sole proprietorship, partnership, and joint stock company. So what we are going to do is that in class 11, your syllabus is so designed that we've gone through with all the financial accounting adjustments and portions according to your standard in class 11 only. Now in class 12, what we'll be concentrating is that how do we deal with the accounting part of financial accounting and company accounts. Okay. Financial accounting related to partnership and company accounts. So we are going to begin with partnership accounts. Your first chapter of the financial textbook itself is on partnership accounts, and you can see that the first chapter heading also says fundamentals, right? So what are fundamentals? Fundamentals are the basic core principles. Now the first preliminary 3-4 pages or sides of your textbook, you can see where they've given you meaning of a partnership firm, then features, characteristics. In some of the older versions of the book, you may have rights of the partners, or in the latest version you may not have also. Then you've got details of partnership deed. Now of course the partnership deed is there in all of your textbooks, but what I want you to do is that alongside going with your accounts textbook, you can also go through your class 11 partnership chapter. There also details of partnership have already been covered. So anybody who's missed the theory portion then can just go back and refer to the class 11 commerce textbook, and probably that's chapter number 6 in your commerce textbook of class 11, and you can well get rehearsed with the theory part. Now, as in that YouTube video, you must have seen that it has been shown that we form profit and loss appropriation account. Now, when I give you the introduction on this chapter, I need to tell you that, remember we did final accounts where the first part we divided the entire page on the left hand side of our exercise copies to be the format of trading account and PL account conveniently, and right hand side to be the balance sheet, isn't it? So what we are going to do is now we will maintain that same format of trading account and PL account, and on that same left hand side page we will consider a third part also that follows profit and loss account. Now why so? Why are we asking you, or why am I asking you to do so? The reason is that, see, whether I'm running a sole proprietorship business or a partnership business, I will definitely be interested in knowing that what is the end result of my business. I did business for last 6 months or last 1 year. What is the end result that I have formed? So what is the end result? If my income is more than expenses, then I will have profit. If my expenses surpass income, then I will have a loss, right? That's the entire purpose why we prepared a trading account and PL account. Remember, where we adjusted all our direct, indirect expenses and incomes, and ultimately the net answer was our net profit and net loss. And where did it get transferred to? It got transferred to balance sheet under the head of capital, right? Okay. So what we are going to do is, here we take a step further. We are considering, let's say, suppose we are 3 partners, say A, B, C, or let us be more adventurous. Let the partners be, say, Orchishman, Barsha, and Chirag. Okay, so Orchishman, Borsha and Chirag, we start a partnership business. Now, of course, during the entire year, they've gone into a lot of trading, buying and selling, and various sorts of incomes and expenses. So, at the end of the term, all the three partners would be interested in knowing that what is the income and what is the expense. Let us find out the difference. And conveniently, let us suppose that they have a profit of 1,50,000. Okay, 1,50,000 profit for all three of them, Orchishman, Borsha and Chirag, right? So if you go through the partnership deed, or you must have gone through the, or you have seen the video already, there you've come across the thing, certain thing like partnership profit sharing ratio, where if nothing is told in the deed, it is shared generally in the ratio of 1:1:1, where there are three partners. That is equally in case of all the partners. And if the ratio already is given, then you will divide the profit or the loss according to the ratio. Now over here, let us assume that Orchishman, Borsha and Chirag, they have decided already that the profit or loss will be shared in the ratio 1:1:1. Done. No issues with that. So 1,50,000 is the profit they have calculated in their business, and now all three of them are saying that fine, we conclude the business. And so if 1:1:1 is the profit, then Orchishman is supposed to get 1/3 of 1,50,000, that's 50,000. Since it's the equal ratio, you can calculate it, or you can do it mentally also. 1:1:1. So all three partners will be getting 1/3, 1/3 and 1/3 of 1,50,000. That's equal in share. So each of them are getting 50,000. But suddenly Orchishman says that, okay, fine, I will be getting the profit of 50,000. But then, most of the clients in our business came and entered into the transactions because I influenced them. I am a popular individual. People know me, and I have quite a big amount of hold in the market. So I've got all the probable clients, and business has only been successful, and the entire partnership firm has been able to crack such deals just because I got the references. So profit is okay. The other two are also getting. Borsha and Chirag are also getting. But I was a key role in bringing in all the probable customers. What extra benefit will I get? So profit though Orchishman is already getting. What extra benefit? So he says, okay, fine. Because I initiated more amount of sales, so what do we generally give as an incentive to someone who increases the sales? Commission. So Orchishman says, okay, fine, I should be entitled to a certain commission. Okay, done. Borsha and Chirag, they agree. Now Borsha says that, okay, fine, you got most of the customers, but then if that is the case, that you are being given an additional benefit of earning commission from the firm just because you got more of the deals or people who would enter into deals with us, I came to the office each and every day, and I worked from morning 9 to 6 o'clock in the evening for this entire firm, where you and Chirag were all absent and doing field work and other things. I have given my 100% of working hours to the firm. Then apart from profit, what else will I get? Now, what do you give somebody who works for all around the clock in the office? You obviously give that person salary. So Borsha would be getting salary, apart from the profit that she's already entitled because she's a partner. The others agree. Orchishman and Chirag agree. No problem in that, because of course it's true that she's been devoting her time from morning to evening in trying to manage the office. So that's done. That's quite deserving. Chirag says that, okay, Borsha is getting salary because she's been working in the office, and Orchishman is also getting commission because he's got more number of customers for the firm. But you're forgetting something. Though we decided the profit to be shared equally, but what about the fact that both of you contributed 2 lakhs capital each, and I contributed 8 lakhs of capital? 4 times. Urchishman contributed 2 lakhs, Borsha contributed 2 lakhs, and Urchishman contributed 8 lakhs. Now, at this point of time, I would just like to make one thing clear, that profit sharing ratio has got nothing to do with capital contribution amount as of now, at least in this case. Okay? Now, how will you satisfy monetarily that partner who's contributed more and more and more amount of capital compared to the other partners? Of course, he's not a fool, no, that he's gone on investing 4 times the capital than the other partners have invested. He should be getting some additional benefit. Yes or no? 100% yes, isn't it? So he says, Chirag says, okay, fine. Let's decide on interest on capital. When the firm is getting capital from the partners, the firm is supposed to pay interest on capital as a returning reward to the partner. Right. So let us all fix that. Let the percentage of interest on capital for the partners in the firm be, say, 5%. So how much will Urchishman get for his 2 lakh contributions in the entire year? That is 5% of 2 lakh rupees into the entire year, the time period, right? So 5% of 2 lakh rupees is how much? 10,000. Done. Similarly, Borsha will also get 10,000, 5% of 2 lakhs. And how much will Chirag get? He will get 5% of 8 lakhs for the entire year. So that's 40,000. So now Chirag can be satisfied, or he should be happy monetarily, that fine, I have invested more amount of capital. So compared to the other partners, those who are getting 10,000 and 10,000, I am getting 40,000. Now, you remember where did we begin our discussion with? We began at that point that the firm has earned 1,50,000 and the partners were ready to take away a profit of 50,000 and 50,000 and 50,000, and the sum would have ended. But now the scenario is that apart from that net profit of 1,50,000, Urchishman has claimed for a commission, say for instance 20,000. Borsha has claimed for a salary, for instance, supposedly, that comes to 30,000. Okay? And Chirag has brought into that factor of interest on capital. So it was further found out that Urchishman get 10,000 of interest on capital, Borsha would get 10,000 of interest on capital, and Chirag will get 40,000. Now you only tell me, apart from the normal expenses that the firm incurs towards the outside parties or the outside world or with the external vendors, right? The external deals I'm talking about. Paying salary to the workers or staff in the office and paying salary to Borsha, is it the same thing? I'm sure you all are saying no, isn't it? Say you had salesmen in your firm. So paying commission to your salesmen and paying commission to Urchishman, who's a partner, is it the same thing? Of course not. After all, Urchishman is the partner of the firm. How can it be the same thing, isn't it? Again, paying interest on any other liability and paying interest on capital to the partners of the firm, is it the same thing? Again, no. Right? Here comes a difference between which items or which terms should be associated with net profit of the business and which should be put into the appropriation part. And what we are learning is appropriation of net profit. Why do we use the word appropriation? It comes from the word appropriate, means something which is justified, something which is apportioned, something which is divisible, right? So 1,50,000 was the net return of the business, net profit of the business. But after that 1,50,000, before you actually divide the ultimate profit amongst the partners, they are supposed to get commission, they are supposed to get salary, they are supposed to get interest on capital from that net profit. And further on in this chapter, under fundamentals, we are going to learn how to apportion such profit. Am I clear? Did you understand? Right, I assume that you've understood, or if not, you can again go back to the listening thing, rewind your voice recording and just listen to it, and I'm sure you will understand it the second time if you listen to it. So, basic question comes, paying salary, commission and interest on capital to partners. Is it expenses for the firm or income? Of course it is expenses, because of course when Borsche is getting the salary, who's paying the salary? The firm. When Utsha is getting commission for the additional sales that he made, who's getting the commission? Utsha. So who's paying it? The firm. Right? So are we working for the partners or are we working for the firm's books of accounts? Of course, we are working for the firm's books of accounts, isn't it? So when we are working for the firm's books of accounts, salary will be an expenditure, commission will be an expenditure, interest on capital paid will be an expenditure. Agreed? Right? Okay. So, as you must have already seen in that video, PL appropriation account is a continuation of profit and loss account. So when we draft profit and loss appropriation account, like we did not draw any separator line in between trading and PL, we are not going to draw any separation line in between PL and PL appropriation. Right? So how do we transfer the profit, or how do we jot down a sum? Provided you have a profit of 1,50,000 for the firm that all three partners are running, your net profit will be written as, in the PL account, on the debit side, you will be writing to capital account generally. Now over here, there's work left. You can't transfer the profit to capital because we are yet to appropriate the net profit, isn't it? So, first step was trading. Second was profit and loss. Third is profit and loss appropriation. So from when you transferred gross profit from trading to PL, in trading you wrote to PL. So in profit and loss account, you've written by trading account. Similarly, when you're transferring the profit from PL account to PL appropriation account, I repeat, when we are transferring the profit from profit and loss account to profit and loss appropriation account, in PL account what will you write? To PL appro. So in PL account, if you're writing to PL appro, in PL appro what will you write? By PL account. And 1,50,000 transferred in the credit side. That is just a continuation of PL account. So basically, all the incomes will be written in the credit side and all the expenses will be written in the debit side. And whose incomes and whose expenses? Not the partners. I repeat, not the partners. You have to cautiously, rationally think and place your items. We are talking about the firm's incomes and expenses. So the profit of 1,50,000 that the firm transferred, that was firm ka profit, isn't it? So you wrote by PL account. Credit side, you've got the profit, 1,50,000, and in the debit side, you've got salary, to commission, first item, Utsha, you've given 20,000, right? To Borscha's salary, so you've given another 30,000. You're understanding why am I writing to commission, to salary, because all those are expenses for the firm, and we do the posting on the debit side, isn't it? Similarly, when you're writing to interest on capital, we'll be writing on the debit side to interest on capital. We have Utsha, Borscha and Chirag. So for Utsha it was 10,000, for Borscha it was 10,000, and for Chirag it was 40,000, isn't it? Now, obviously, for three of them, you will not be writing to interest on capital Utsha, to interest on capital Borscha, then again to interest on capital. Of course, we wouldn't be doing like that, isn't it? Remember how we drafted depreciation for various assets in your PL account? We always wrote the individual items in the inner imaginary column and found out or transferred the total, the means total, in the amount column. Here also the same thing. So we'll give the heading to interest on capital, put a colon sign, and then we'll write Utsha 10,000 inner imaginary column, to Borscha 10,000 inner imaginary column, and to and Chirag 40,000 inner imaginary column. So 10 plus 10, that's 20, plus 40, so that's 60. 60,000 of interest on capital will be transferred in the outer column. Taken? And now, let us forget about your trading account and PL account. We've already we have sealed that, isn't it? That's the reason why we got a net profit of 1,50,000. We are only concentrating on that last 1/3 portion of your exercise book. That is what we are concentrating. Credit side has 1,50,000 net profit transferred from PL, and debit side you've got 20 for Utsha commission, 30 for Borsha's salary, and 60 for interest on capital on all the partners. Now, how do you balance a ledger account? As simple as that. Find out the heavier total. Over here, the credit side total is 1,50,000 because there's no other item. And in the debit side, you've got 20 plus 30 for commission and salary. So that's 50,000. Another 60. So that's coming to 1,10,000. 20 plus 30 plus 60. So that's 1,10,000. Which side has a higher total? Obviously credit side, 1,50,000. Which has a lesser total? Debit side, 1,10,000. What is the difference? 1,50,000 minus 1,10,000. How much is it coming? Yes, absolutely right. 40,000. 40,000 is the difference in the balance. So when you have 40,000 in the difference in the balance, and initially it was decided, isn't it? All the partners will be getting equal profit. So now you divide 40,000 amongst all the three partners. Agreed? So it should be coming to 16,667, 16,667 and 16,668. Just calculate once and check the totals if I'm correct. Right? Agreed? So we have done that. Now we will write share of profit. Which side did you get the balance? You got it in the debit side. So debit side only, that balancing figure of 40,000 will be written in the outer column, and we have divided it amongst all the three partners as 16,667, 16,667, and one we have to round it off. So 16,668 for the third partner. Right? And we are writing that in the inner imaginary column. And the account where you will transfer this to is to partners capital, share of profit. Remember, for sole proprietorship business, where did you transfer the net profit? To capital, under balance sheet. Here also it will go to partners capital, but here we call it to be share of profit. Right? Sum is done. Now this entire chapter that we are going to proceed with is with this part of our financial accounting, that is appropriation of profit. So if I just give you a recap for next 1 minute, it would be the firm earned a profit of 1,50,000, but that was not the true and fair value of what would the partners get amongst themselves. And what do they get? They will be getting the residual amount of profit after apportionment of that net profit for various heads under different expenditure heads. And that residual amount of profit, the ultimate figure, that 40,000 that nobody else is going to disturb, that is theirs in terms of profit for all the three partners, that is called as divisible profit. Did you understand? So PL account will be giving you a net profit, and PL appropriation account will be giving you a divisible profit. Any doubt? I'm sure no. Right? Just one thing to add, you will be getting on further on chapters. I know for the first day it is too much. You will have to, as it is that we are not being able to see each other, you will have to relate to the YouTube thing, then you will have to relate to my voice message, then you have to go through the textbook. Just one thing to add on over here is, can anyone tell me, as in, like I told you, the firm's expenses to be salary, commission, interest on capital that the firm pays to the partners because of their efficiency and work. Is there anything that the firm can actually charge from the partners? Okay, I'll give you a small clue. Like, firm is paying interest on capital because the partners are contributing capital to the firm. Is there anything that the firm can charge from the partners? Ah, yes, right. I'm sure some of you already got the answer. Capital contributed by the partners, the firm gives the reward of interest on capital. If a partner withdraws, what is the opposite of capital? Drawings. So if the partner is withdrawing, then don't you think that the firm will be charging from the partner? Right. So in this entire thing of PL appropriation account, like in the debit side, we've got things like all that the partners are supposed to get from the firm's expenses like salary, commission, interest on capital. And as the chapter proceeds, you will be coming with a lot of other things also. There's only one thing that comes from the partners to the firm, and that is interest on drawings, right? That is interest on drawings. So when a partner withdraws from the business, then the partner is liable to pay interest on drawings. So like interest on capital was an expenditure for the firm, interest on drawings will be income for the firm. Correct. and the balancing remains in the same way. Now I think you can relate to your YouTube thing. You can go ahead. What I want you to do before the next class is that you will be going through the partnership deed details. Then on page number 1.4, you will be having provisions of Indian Partnership Act. You will be getting there a table where it says sharing of profit, interest on capital, interest on drawings. I will be coming back to this, but first and foremost you will go through my lecture and you will be reading this along with certain illustrations that I'm asking you to read, and then we'll relate to this in the next class, right? So you can mark illustration 1, the answer is already given. Then you've got interest on partners loan to the firm. We will be dealing with that also. Illustration 2, please mark that, where you've got capitals of 5 lakhs each contributed by the partners. Illustration 3 is on page number 1.7, where you've got October 1st and 1 lakh and 1 lakh 50 respectively capital contributed by the partner. Illustration 4 also, where the ratio is given to be 2:3 and capitals contributed at 2 lakhs and 1 lakh. Now you must be wondering that why am I giving you these details of the illustrations? Because I'll tell you something. Some people have the older version of the book and some people have the new version of the book. So the sums are same. Maybe in the new textbook the names of the partners are changing. Okay, so when the names of the partners are changing, nothing to worry. Even if you are trying to discuss amongst yourself, you will find the sum is same. Same capital, same amount of contributions, same all details except for the name of the partners. That's the reason why I'm giving you certain details for all the sums. Then after that you will have interest on loan by the firm to a partner. Please give it a reading. There are accounting treatments also. I will be discussing that in the next class when I come back. Illustration 5. Illustration 6 is on page number 1.10. So we'll go through that also, where you will end the first round of preparation, or what should I say, the first period ka lesson is on page number 1.11. We've got rent paid to a partner, right? So you will go through the accounting treatment. Here you will find a difference table given to you, charge against profit and appropriation of profit. And I think when we were doing the sum, I told you what is net profit. So that's charge against profit, and appropriation of profit. I think we did that part quite in detail. After that, the next page you will get journal entries relating to profit and loss appropriation account. Now reading through this shouldn't be much difficult, because the first entry is about transfer of profit. Then you've got interest on drawings, interest on capital, transfer to reserve, salaries, commissions, etc., etc. And that ends with profit and loss appropriation account format. And now what you saw on the YouTube, what you heard from me over the voice message, and that textbook format that you already have. When you compile all these three and you sit and study, it shouldn't be difficult. Okay? Again, I repeat, nothing to worry. When we meet in school and we take up sums at the end of the chapter, everything will be, just recapitulated once more. In class 11 also we've done like that. We've revised each and every chapter, all difficult problems possible. Isn't it? So this also, this being your ISC topic, nothing to worry. I will be there and it will be taken care of. But at least this much of homework is supposed to be done by you. So the next time when we meet, each and every one of you, my entire Super 30 should be well versed with PL appropriation accounts format given in the textbook, the features till there, and further on we take up the next portion. Okay, thank you everyone, take care of yourselves, bye bye.